Today, we're exposing buy-to-let property development companies and investment clubs who are duping the public with false information. I'm Warren Horak, and this is Neil Foster from Organic Growth.
Hi.
And today we're going to be going into depth, and we've got 12 buy-to-let investment questions that we're going to take you through. And Neil is taking his time to bring these questions, and I'm going to take him through these questions. And this is an expose like you've never seen, and this is going to help you. So please get this out to your friends. Don't forget to subscribe. Click the like button as well, and click the bell so that you'll be notified, because this is vital information, because soon you might be getting, or you already might have, one of these emails. Tell us about what happened to you in the last 2 weeks, Neil.
Yes, I got, in fact, on the same day, I got spammed by two companies.
On the same day?
Same day, yeah.
Okay.
And the one gave me this brochure, and the other one was a less flashy, but nevertheless an email with detail. And what they do is they're both offering buy-to-let opportunities. Mm-hmm. And I mean, recently I did a video about why I don't buy brand new. And I'll put a link, maybe a card. Put a card up here. Mm-hmm. Okay. I'll put a card up here for that video. But I did a video especially about why I don't buy off-plan. And this just cemented, in fact, it gave me more information.
Sure.
Because for the first time, I actually went into depth into what these people are offering. I even took the trouble to phone them. Yesterday, I was on the phone, and I asked them these questions and some more. I asked a whole lot of questions, and the so-called investment expert, that's what they call themselves in the email, couldn't answer the questions. The basic, simple property investment questions they couldn't answer.
And they haven't come back to you?
No. I didn't really expect them to. They said they'd come back to me with answers, but I think they know that when a person starts asking these questions, they're not buying.
Yeah.
You know, I wasn't being aggressive. I was just asking, when you say return on investment, what do you mean, for example?
And they couldn't answer.
So let me take you through this one for a start. So I'm leaving out, I scratched out the name of the company, because actually it's not about a particular company. There are lots of them all doing the same thing. It's almost like they copy each other.
Okay.
There's kind of a flow. You see it. When you see it over and over again, you start to see what they do.
There's like a whole system they use, and then once you've gone through this video, you will be aware of it. And oh yeah, very important, watch till the end, and we're going to give you like a free download of what we're going through today. So that's a surprise at the end. So watch till the end, because we're going to go through 12 specific questions.
Yes, we want to equip you. We want to equip you to ask the right questions so that you can make the right decision.
Yeah, and please share this with friends, anybody that's interested in property or buying properties. These questions are so valuable. And included in there, we're going to be developing a calculator, a buy-to-let investment calculator. In other words, to put the numbers in there to see whether it's a good investment or not. And that's a real test for buy-to-let investments.
Should we kick off?
Yep.
Should we kick off?
Over to you.
Okay, so what you tend to see is they're all at different levels of professionalism. And for example, this complex, they got photographs. So that's a clue that's already been built. This one, it hasn't been built yet. And a lot of what they say is right. I mean, you look up front here, they advertising, this is the benefits. So these guys are very good at marketing. They're offering security, biometric access, security, perimeter walls, security, they're just hitting the security, prepaid utilities, fiber, a fitness track, DSTV, visitors, all the kind of stuff. In fact, things that you have to have, they're still saying they're putting it out as benefits. But that's fine. You know, you do your homework, go through it all, have a look at the place. Then you get to, when they start putting numbers, tables of numbers, that's what piques my interest, because I start saying, what are they not putting in here? For example, they just throw out a number, investment return of, and they give you a number, but they don't tell you how they got to that number. And as I've discovered, I've been in buy-to-let now for about 30 years, and I don't find there's no standard what a return on investment is in property, because everybody uses their own measurements, and unless you as an investor know what's being measured, you can't compare apples with apples. And they seem to think that they can just throw a number of yield of 10.65%, it's always about two or three decimal places, that you'll just believe it. Okay, so let me go through this. when you get to a floor plan, okay, the thing you're looking for here, it's very easy to look at the pretty picture and see the furniture. But bearing in mind, this furniture has been purposefully built for this unit or designed for this unit.
Sure.
So your own couch is not going to fit in there. And the other thing is you need to feel for sizes. So these are first and second floor apartments of 54 square meters.
Sure.
Now, a 2-bedroom at 54 square meters is tiny, tiny, tiny. Personally, a 2-bedroom that's below 60 squares, I wouldn't even look at.
It's too small.
It's really.
You won't be swinging a cat, as they would say.
Yeah, well, you look at it in the second bedroom, it takes only a single bed. Now, with most buy-to-let units, a 2-bedroom, you often have 2 friends staying there.
Okay.
And they'll each want a double bed, but now one of them's got to sleep in the wardrobe.
Sure.
Because that second bedroom is more like a wardrobe.
Okay.
So you've got to be very careful, and in this particular one, it looks like the balcony is part of the square meterage.
Sure.
So you take a 5 square meter balcony off there. This is a 2-bedroom unit that's actually less than 50 squares.
Sure.
And it's very hard for Joe Public to picture size. I mean, I've got a feel for it because I'm in it. But use a double garage as your measurement. A double garage is 36 square meters.
Sure.
So this is a 2-bedroom townhouse, just a little bit bigger than a double garage, and that includes the balcony.
Okay.
So this is very small. So it's fine to buy small, you just need to know what you're buying. And the things that I'm seeing here is, we're going to go through most of these in depth, but I look at it and I just see rentals and I see levies, and my hair stands on end when I see the levies they quote. They often offer some sort of a bonus. This one gives you monthly levies for 12 months thrown in. So they subsidize your levies.
So that's a discount, basically.
Yeah, they give you a discount. So they add the discount to the price, and then they discount it back again and make you feel nice, because everyone likes to get something.
Yeah.
And
But you're paying for it.
But you are paying for it. Of course you're paying for it,
yeah.
And it's all the smoke and mirrors. It's really seeing through the smoke and mirrors. So I'm trying not to be too negative here. But I feel quite aggravated by it, and I'm trying to not let that show.
We're basically trying to help you not to be duped.
Yes, I want you to just open your eyes.
We're talking about people that got a lot of money. They're very intelligent. They cannot see through it because it's like a magical trick, and it's a sleight of hand. And if you don't know what to look for, you can be duped when you think you know something. Because,
just look here.
And for Neil, he's in the game 30 years. So for him to see it's easy. It's like a surgeon. He can see things other people can't see.
For example, here, look at the numbers here. They don't even agree with themselves. They say monthly shortfall.
Yeah.
Okay. And then they offer you a net yield of 8.2%.
And there's a shortfall.
But it's a shortfall. So how can you have a yield if it's negative? It's a negative yield.
So they're saying you're making a profit when you're making a loss.
Yeah, they're saying you're making a profit of 8.2%. That's if that's within. Their net yield is supposed to be what you earn after your rent comes in, all your expenses, what you left over.
They're saying that 776 shortfall, but they're saying there's a yield. So basically,
they're just lying.
Okay.
No, it's just a lie.
That's a lie. Okay.
That's a lie. And you know,
you can't have a yield if you're having a loss.
And I thought at first it was a mistake, but they're consistent with it in the examples in this particular company.
Good,
they show you a monthly shortfall and then a net yield of a positive net yield. Okay. So that's that one. I like the location of this property.
Okay.
I like the look of the properties. I think they're a little bit small. I like the idea that it's face brick, because that keeps your levies and maintenance down going
so
forward.
There's some positives.
Yes, there are positives.
But the negatives you'll see just now when
you must pay the right price.
If you're overpaying, you
and have the correct expectation of rentals and levies and so on.
Okay.
So
the numbers must be right.
Yes. So let's go to this email. Now this is the email at the top here. I wrote to Warren and said, Warren, check out, and I mentioned the name of the company. There's Smoke and Mirrors. I see a video coming. Here's the video. Here's the video.
So that's why we're doing the video. Today we're doing the video.
So they got my name and my email address. I don't know from where.
You got two in one day.
Yeah, one day.
One day I got two different companies.
So I thought, no, so I've got to do something about this. This one, they offer a gross rental yield of 10.49%.
49.
Yeah, but they don't tell you how it goes. They
don't give you the numbers through which they base that number. Okay. So it's just some.
So I'll put this up a bit closer so you can see it. But the quick takeaways here is they offer a rental assist.
Okay.
Now, if the market-related rental is correct, why would they offer you rental assist?
What is rental assist in a nutshell?
They give you a discount. They give you 1,000 Rand a month or 2,000
So they're
Rand a
basically
month.
saying if you're not getting a tenant, because remember these are buy to let, that means, in fact, that some of them are saying that they give you a tenant, a long-term tenant with
That
it.
one said long-term tenants, but they're vacant. They haven't been.
So how can you get a long-term tenant when, they're vacant and now you got a long-term tenant?
Yeah.
Okay.
And they often offer a rental discount because in their figures they projected a rental that was above market. So then they give you a bit of a discount. So
okay.
and then they
build it in.
They still give you a shortfall and a positive rental yield. So they're same tricks.
Okay.
Same tricks. This company, I phoned them.
Okay.
And I spent about an hour on the phone with they're called a property investment specialist.
Sure.
And their description of the gross rental yield is the rental number, in other words, the 6,200 Rand a month, times 12, divided by the purchase price.
Okay.
So it takes no account for the actual expenses and assumes you paid cash for it. But now this is a property investment specialist now who invests their own money.
Yeah, exactly.
And how can you possibly even this gross rental yield is garbage, because what does it mean?
It's a meaningless number.
It's absolutely meaningless because it's just meaningless.
Yeah.
Because you didn't invest your own money.
No.
And there's a shortfall. So it's meaningless. So don't. The trouble is you see 10.49, and then you go and look at the bank, and you see, I can get 7-8% in the bank, and I can get so much.
So you're comparing
shares.
it, but you can't compare it.
You're not comparing apples with apples.
Okay.
So you've got to do your own numbers, which is why we have our calculator for you to do your own numbers. Okay, we're going to go through this particular one now, an investment. So Warren's got a whole lot of questions here he's going to ask me, and that's probably the most structured way we can go through. He's got 12 questions, and we're going to go through these things item by item, and he's going to question me on them. So fire away.
Okay, number one, this is the first question. How do I know if the price is right?
Okay. Okay, there are a number of ways of doing it. First thing you've got to do is you've got to compare this development with similar units in the area.
Okay, yeah.
Okay. And the only way you're going to get the real number is looking at deeds office information.
Okay.
Because what you see advertised on the internet might be the other developers, etc. So part of the homework is to go and find out. You got to find out exactly how big this unit is and where it is, and then go and look at the deeds office records.
Yes.
And look at the similar ones. Okay. Then look at size. A 1-bedroom unit should not be less than 50 squares.
Yes.
A 2-bedroom should not be less than about 60 square meters.
Okay.
Anything less than that, you really are putting yourself into low cost
that one
housing.
you're talking about, are you going to still talk about that 1-bedroom one at 36 square meters? Is it 30?
We'll get there.
Are you going to get the double garage one?
Yes, there we go.
Because Neil's saying, we were talking about the size of it, and what is the size of this thing? How much is it?
This one is 34 square meters.
34 square meters.
This particular one.
Yeah,
okay. I phoned and asked in depth here. This is 34 square meters.
Now, what size is
this
double
is
garage?
1 bedroom, 1 bathroom.
One bedroom, 1 bathroom.
34 square meters.
600,000.
For 600,000 Rand, and it is smaller than a double garage.
Smaller than a double garage. You're paying 600,000 Rand for a basic double garage with about 2 walls in it.
Okay, so that should scare you.
And a bathroom, yeah.
But there's things have a market value. So let's look at the market. I always go back to market. I'm happy to pay exorbitant price as long as the rental is there.
Yeah.
So it's all about return on investment.
But listen, the other thing that we've got to look at here is new versus second-hand properties. Okay. So once you've got a tenant in it for a month, it's second-hand. So what happens is a very important thing, which actually goes into depth in the other video that you're going to link to, is that when you buy a property second-hand, you're paying a way lesser price for it per square meter than
sometimes half.
Half,
pretty much
like
half.
literally about half the price than you're going to get a new one, and they sell you on the new one because they're going to say there's no transfer fee. Okay, yes. So the transfer fee is 40,000 Rand. But if you look at 600,000, half of that's 300,000. So what happened at the end of the day, you got to actually do the numbers, otherwise you're going to be duped. You got to do the numbers, otherwise you won't be able to get through this.
So getting back to the price. It's just we've got notes so that we don't go off track, because we're quite passionate about this, as you can see. So you've got to look at the sizes, and once you look at the size, then you've got to do a quick calculation, and you've got to divide the price by the size. So you get a rand per square meter.
That is your critical number. That is the critical number that you must look at. Whenever you're buying a property, I mean to investment property at least, look at the rate per square meter, because that's a standard rate. Rate per square meter.
Well, it's not so standard, but you get a feel for it.
No, it's a standard compared to everyone else. No, I'm talking the formula standard. The formula standard. It's actually price divided by square meters. There's no confusion about that one.
No confusion.
It's not like an ROI one.
Well, the little confusion is, am I including the size of the balcony? It's all smoke and mirrors. You've got to go to ask the question.
Literally, he's got a good point. So could you imagine you got like a 5 square meter balcony? You can deduct that off, because you're not living on the balcony.
Yeah.
Oh my word.
But you're paying for it, okay. Then the next question is that, I think I covered that.
No, you covered that. When it's number 2, when it says price from, what does that mean? Price from.
What it means is that's the minimum price of a unit in that complex.
Okay.
Okay, so if you see 1 bedroom, 1 bathroom priced from $599, in my experience, when you call them up, that one's gone.
Oh yeah, I was going to say that one's always sold.
That one's gone. Or else it's the top floor.
What do you mean top floor?
Well,
how many floors have we got here?
Okay, that's
is this a block of flats? Or
so in this one,
is this townhouses?
Yeah, these are townhouses. So this one is which I quite like the development.
Yeah.
This is ground, first floor, and second floor.
So there's only 2 floors. So that's
2 floors above ground.
3 levels.
3 levels. Yeah. This one is 4 levels.
4 levels.
So this 599, 1 bedroom, 1 bathroom in the north of Pretoria. It's near the airport, at Wonderburg Airport. So not such a great area. There was a day that you were ashamed to say you lived there.
Okay.
And for 599 rand. No, 599,000. Okay.
Okay.
So price from is often the cheapest unit and it's often not available. It's just it's like bait on the hook.
All right. So would you recommend people get units on the 4th floor, or like literally the 4th level?
No, I wouldn't go above ground floor and first floor. They love. Above that, you start getting dodgy.
Who doesn't like it? The tenants.
They
don't want to walk up there and move their furniture up and down.
I tell you, I had a couple of units on the 3rd floor.
All right.
2 units.
So if you invest,
I sold them both in 1 month. Because
don't go for anything above the 2nd level.
Yes, that's very scary. Well, you can tenant them, but you're going to get a lower rental, and your tenants don't last because they come back with their shopping. Imagine coming back with your shopping, and you've got to go up 4 stories.
That's a valuable tip, and you only learned that after years. So that one there is worth watching the video. Just what you've got there. That one is worth gold, because you sold your top one.
Yes.
Okay. All right. So the next. Okay. Have you finished?
You've got to ask the level.
Yeah.
I think that's the next question you asked me about. You've got to always find out what level these things are on, because above 3rd floor you're going to need lifts, and if they got lifts, then expect your levies to go through the roof, because now they've got to maintain lifts.
Okay.
So generally there's no lifts in these things.
All right. That was question number 3. Now question number 4.
Coming to levies.
Yeah. What is the levy?
Okay. The levies. When I saw the levies here, that's what made my hair curl. What I've got left of it. They said 399 rand a month.
399.
Yeah. Now I own a few units in similar areas.
Yeah.
1 bedroom units. This is 1 bedroom, 1 bathroom. So you've got to compare apples with apples. And I wrote them down here. My Baccarat unit, my levies are 1,202 rand.
Okay.
Plus 157. So that's 1,400 odd.
Yeah.
And the other one is 1,800 rand plus a reserve levy of 253. So that's 2,000. So the 2 units that I own, the levies are about 1.5 to 2,000 rand.
And they're saying
for a similar unit, they're saying 399.
Okay, so here's the thing. So you think that the levy is going to be that, and you take occupation, and eventually the first month you take occupation, they just triple the levy, and then you can do nothing.
Not quite, Ron. They can't change the levy so quickly.
Okay.
It's got to wait for the annual general meeting.
Well, that's why you got your. That's what you
have an AGM, and then of course you've got a budget. And the trouble is that this is the developer putting together the numbers.
Yeah.
And he's on site with his whole development company. He's got site security. He's got maintenance people on site, and his management team on site.
So there's no expenses.
So he hasn't allocated money there.
Yeah.
But once the developer's off-site and you've got your body corporate having to manage it, you need to outsource your security. You need to get maintenance people. It's a call-out every time they come in, or else you've got to employ somebody full-time.
All comes into your cost.
Your security, and then suddenly you see that this levy, I'm guessing, is about 40% of what it should actually be. It should be about 1,000.
Okay. But you see,
And they say
that'll
44.
have an impact on all your numbers and your
Of course.
return. What are you going to get? Because if you underestimate the levy, all your numbers are wrong. Okay, so take me through. I mean, these 5 different kinds of levies here.
Oh, yes, levies.
Factors in the levies. Let's
Okay.
just go through what you got to look out for, because a lot of times I say levy, you got to say, does it include 1, 2, 3, 4, 5?
In that levy are your maintenance costs,
Okay.
your security costs,
Okay.
your complex management, your
Okay.
Csos levy.
All right, so that's all.
And you've got to have a maintenance reserve fund as well.
Sure. So
So
there's
for
5 different costs in there. And what about sewage?
Well, sewage is, okay,
So they charge separate.
that's separate. That's
Okay.
separate. That's part of your,
Is that here?
in this one,
Did they leave sewage out?
no, they left sewage out.
So does that mean you're not allowed? What did you? No toilet.
They just left it out. That's the other thing is,
I mean,
they put these tables together, they leave stuff out.
So there's no sewage on that one.
No.
How much is sewage just for the?
It's
for
600 rand. 590.
600 rand?
It's 595 or 598 per
a month?
unit. Per
So
month,
that's
yeah.
like a huge amount there. That's
Yeah.
more than the levy.
Yes. Okay.
Okay.
So the same company. Okay, same company, 2 different tables.
Sewage.
In one of them,
There's
they
6,000.
put in effluent. There it is, 598.
Okay.
But their second table, they just don't put it in.
You see that?
And then the first one,
If I didn't ask that question, we wouldn't highlight it and say, yeah.
and the first
the
table,
first one's gone. It's not there.
the first table they put.
Oh my goodness! You got to be sharp.
This first one, they don't put any agency fees, property management and leasing fees in it.
Oh, wow.
The second one they do, but it's a subsidized amount.
Oh wow.
So I had to ask them, does that
are-
include commission?
What is agency fee? Just explain to the.
You got two fees normally. It depends. You can do it yourself.
What do
Or
you do? What yourself?
You can manage the property and you can find your own tenants yourself.
Okay. Yes, you're managing your own property,
There
or
are
you're going to get an agent
here.
to do it.
The one is the monthly management. That is the every month invoicing the tenant
Okay.
for their electricity, their utilities, their rental,
Yes.
following up on the rental income,
Okay.
and doing the maintenance side. That is management.
Yes.
And then on the leasing fee, that's leasing commissions. That is the fee you pay the estate agent to find you a tenant.
Okay.
And that fee includes sourcing the tenant, doing the proper credit checks, and so on and so forth. So they're 2 separate fees. And in the industry, it's about 15 to 18%. That's the
Okay.
norm
All right.
for those 2 numbers per year.
We've just jumped to that number 7. Are the estate agent fees accurate or included?
Yeah, okay, then we'll get. Sorry, we're getting ahead of
No,
ourselves.
no problem. Okay, so that we've done.
We haven't done that one.
No, we're going to go 5 and 6 now.
Okay.
Did you cover everything under 7? Normally included. Okay, sometimes substance. Right, that's all covered. So now we're going to go back to 5. Is the stated levy accurate?
Okay, so again, we're already on that one, but I've never yet, and I get these things all the time, seen a developer project the levies even close to accurately. Never yet. I've only been in the business for 20, 30 years.
And
So don't expect it to be accurate.
so I would just say.
But
Jump on it.
even if they're at their best efforts, what normally happens, the other thing is, I mentioned this in my previous video, is with a new development,
Yeah.
you're selling to a combination of investors and first-time home buyers.
Okay.
Okay, out of those owners, those 200 new owners, you're going to select a body corporate. You're going to vote, and the only people who come to that meeting are the people who live there. The owners who live there. Investors, they can't be bothered.
Yeah.
Okay, they just don't go to the meetings. So you've got a bunch of first-time home buyers. Between them, they elect a committee. Excuse me. And the committee, the people say, okay, they put their hand up, I'll be a trustee. And they say, who are you? Say, I do, I'm an accountant, or I'm a salesman, or I like property, I'm passionate about property. And okay, you're it, we all vote for you. And that one's a loudmouth. That one says they seem to know what they're doing. Before you know it, you've got 5 first-time home buyers who suddenly are controlling an income of R1 million a month of levies. What could go wrong? Go wrong. And corruption seeps in and all kinds of things. So the other problem I have with buying brand new is you're going to have a brand new body corporate.
We've got no experience.
They don't have a budget. They don't know the rules. They don't know what they can and can't do. So it's fraught. It really is fraught. I've been involved in 2 brand new developments, and both of them, when I say involved, I bought into them early days. Both of them ended up with corrupt managing agents and corrupt trustees.
Sure.
And we're paying the price now. The levies are huge. Okay, so let's try and stick to our questions. In terms of, you asked me Are the levies accurate? I've never seen them accurate. The one thing to look for, which I've also not seen in any of these things, is the reserve fund levy and Csos levy. Those are two things. Csos is a governing body that's supposed to control the sectional title industry, give it some sort of sanity. There's an ombudsman and so on. So it's a nice feature, but it costs money. They were supposed to be reducing levies, but they end up levying us. So there's always a Csos levy, and Csos require that every complex saves up a fund, a rainy day fund. And that fund, that's called a maintenance reserve, has got to equal to 1 year's worth of levy collections. That's a lot of money.
So you're saying a minimum of 15?
So if you don't have at least 1 year's worth of levy in the kitty, you've got to charge an extra 15% of whatever your levies are. You've got to charge 15% minimum, and that money is your savings. You've got to save 15%.
Okay, number 6, rates and taxes.
Yes. Okay, one thing to know about rates and taxes is, and I see both these investment companies that I looked at now made the same mistake, and they included refuse removal in the rates and taxes. So if you're a buy-to-let investor, you can normally get the tenant to pay his own refuse, but not his rates. They don't like to pay rates. So actually they are shooting themselves in the foot here, because as a owner, I normally always charge refuse. And without fail, if I ever speak to an owner and I ask him what his rates are, he combines the two. So look on the back page of your levy account, your rates account, and you'll see that there's a section for rates and there's a section for refuse removal, because the municipality does the refuse removal.
Okay, number 8, is the quoted rental accurate?
Okay, you've got to be careful here that this developer or club is trying to sell you a product. And the easiest way to do it is to inflate the numbers. So you've got to go and do your own checking. You've got to look at similar properties in that area. And look at what rental they are paying. And the little red lights, the warning flares are if you see a rental subsidy, where we guarantee you the rentals for a year. You know that they don't believe their own numbers. So that's why they.
So that's like a warning light.
It's a warning light, yeah. So I like to have little warning lights. When I watch one of these things, my lights just flash all the time.
So what do you think of this rental here on this example here?
Well, on this example here, a 1-bedroom in the north of Wonderboom at the rental of 4,700. I'd be surprised if you got 4,000 in that area. So I think it's high, but yeah.
And the other one?
The other one, I do know this area well. This is in Midrand.
Let's look at that.
This is 6,200 for a 1-bedroom. Never.
So what?
We got second-hand properties that we're renting out about 1 kilometre away from these for 1,000 rand a month less. So we're getting about 5,200 for a 1-bed, and they're saying 6,000.
Now, will a tenant pay you an extra 1,000 rand because they moved in? It was new. Do they a month? Were they going to pay you an extra 1,000 rand?
Maybe a couple of hundred, but not 1,000 more.
Okay. So that's a key thing to look at if you got the rental numbers.
So again, you've got to just do your homework. You've got to go and see what the rentals are. Now surprisingly, on the internet, on a site like Property 24, the rentals asked are quite accurate. Except if it's from a developer. So you get the funny ones, but look at what the agents are asking. That's good, and that's fairly accurate, within 100 or 2.
All right. Number 9, what is the rental subsidy or rental assistance?
Okay, we've touched on this a while. Sometimes they give a guarantee where they actually collect the rental and they give it to you every month. And others, what they do is they give you 1,000 rand a month. So when you take transfer, they might just say yes, 12,000 rand, or they might give you 1,000 a month. I don't know, but it's really it's to help you to help your return on investment. What it does is it makes their figures look better, because they're showing that as rental income. Okay. And as I said, it's your warning light that maybe the rentals that they're quoting are not market related.
Monthly short. This is number 10. Monthly shortfall. What is this?
Okay. They all come down to a monthly shortfall.
This is how much money you're not going to have. You're going to have to subsidize this.
Look, there's no problem with the shortfall. But most buy-to-let property, you're going to find you have a shortfall in the beginning when you get 100% bond. So all of these things have a monthly shortfall, but you've got to do your own calculations. You can't just believe them, because like I said, This calculation, they include a management fee, but they didn't include sewage.
Yeah.
This one included sewage and a crazy levy, and the effluent is in this one. So you've got to do your own numbers. You can't just believe what you've written, what you see.
Let me explain this. Can you imagine now you're going to buy a property, 100% bond, and you working your shortfall is 700 Rand. But when it actually comes to transfer and everything, it's suddenly 3,000 Rand. So you're like 2,000 Rand short.
It can be very wrong.
and suddenly, maybe you bought two, and it's like, you way out.
And then you've got to try and sell them, and you think, okay, I've got to sell them. But now you're competing against this big sales engine where they're offering all the discounts.
And now you're second hand.
Trying to do there, and you end up making a loss, or you just hang on for dear life. Okay. And then what it does is it means that you're putting all your resources into this property, and you can't buy your second property and your third property.
So what does it have to cover now? When you look at your shortfall, you've got to make sure everything is accounted for. In other words, if they start leaving things out.
So that's what our calculator's for. Our calculator that you're going to get. Yeah. I was going to tell them at the end, but you already told them we're giving it to them. So there are two surprises at the end. One of them is the calculator. So you can just go and plug in all the numbers. And if you're talking to a developer, ask him for that number, because there's a number. There's always sewage.
Yeah.
There's always a levy. There's always Csos. There's always a reserve fund.
Okay.
None of these talk about a reserve fund.
What would be interesting to say, look, can we put all those numbers in the contract? Question number 11, rental yield. What is this and what can I expect?
Okay, rental yield. There are three kinds of rental yield. Okay. You've got your gross yield that they talk about, and that is your rental income. Say, in this case, example is 4,700 times 12. Divided by the purchase price. That's called your gross yield. Okay. In the industry tend to call that. The net yield is your rental of 4,700 less all your expenses, all of them, including agencies, fees, and so on. And at the end of it, if you've got cash, then you multiply that by 12 to get your annual amount and divide that by what you paid, not the purchase price. Yeah, what you paid. That's what an investor does. Yeah. But the net yield isn't like that. They take your the rental income less all those expenses. You get to a number. You multiply that by 12 and you divide it by the purchase price. Again, irrelevant number. But if that number is a shortfall, then you're going to have a negative yield. But yet they all offer you a positive yield. Okay. And then the third thing you have is return on investment.
Now that's an interesting one.
Now, return on investment. In all my years in property in this country, I've yet to find consistency in what is return on investment.
They just use different factors.
Because everyone just does their own thing. Yeah. So, for example, the best example I use often here is, say you're a farmer and you plant avocado pears. Yes. And you're farming avos. So you plant your seed. Yes. And you've got to tend it for the first 4 or 5 years. You're putting in fertilizer, effort, and maintenance, and but it's not bearing fruit yet. It's costing money. Yes. So your yield is actually negative for the first few years. Yeah. But if you take it longer term, by year 6, 7, it starts producing fruit. Yeah. Then you've got a return on your investment. But now the investment's all skewed because you invested the money there long ago, or you invested the bank's money. So there are so many dynamics here. So what we do at Organic Growth is we have a return on investment factor. Yes. And I call it a factor so nobody can dispute with us. Yeah. But what we do is we disclose exactly what it is. So there's no smoke and mirrors. You say, this is what we use this to compare apples with apples, or avos with avos. But this is our calculation. That's really what you're after. You as an investor, you want to know, well, what is the calculation and does it cover everything?
Yeah, you got to be completely transparent with the formula. Basically, with the formula. Okay.
So basically, there's lots of mystery here. Yeah. When Warren talks about mystery investments. Oh, you got another question?
Yeah, another question. Don't forget, number 12.
Number 12. Okay, sorry.
Okay, so now we're looking at what is your. This is a very important question because we just this wasn't actually in the notes. We just looked at it just now. Impromptu question. This is a very important question. If you can just comment on development investment clubs where they have this 2 to 3 trust structures and company structures. And they put this whole thing together. You got to buy trusts and companies to protect your assets, and they're selling this because a lot of these investment clubs do this trust structure, and now you got to pay all these fees. And
yes.
Is that now?
So let me just break it down. When you buy property, you can either buy them in your own name, or as a partnership. Warren and I, we can buy properties together as in our own names as a partnership, or I can buy it in a company. So in other words, I've got to register PTY. Or I can buy trust or have a trust formed.
Okay,
I say buy trust, it costs you money to form a trust. So you form a trust and the trust can own the property.
Okay, yes.
And they all have their different benefits. There's no one size fits all. I do know from personal experience that if you're owning less than 4 or 5 properties, there's no reason in the world for them to be in a company or a trust.
Okay, did you hear that? That's very important. So what they want you to do, buy one property, and then they want you to, I mean, you can spend thousands. I remember many years ago, I went and bought my 2 trusts. It cost me like 10,000 rand.
Me
or
too.
something. Okay, so we both.
I had 2 trusts
And
before
this is
my
to
first-
protect yourself from this, and it was like a whole lot of smoke and mirrors, and you ended up 10,000 rand just investing in these trusts you never used. But then the catch is you got to pay a monthly fee, isn't it? How's it work?
Yeah, see,
To maintain these trusts.
Okay, what you got to recognize here is that with I can think of the top of my head 2 different investment clubs in this country that do this. Is they show you that you must they convince you that your properties need to be in a company because the tax rate there is 28%.
Okay, yes, let's talk about tax.
And then a trust is the tax rate is 45%.
Okay.
So they say never own the property in a trust.
Yeah.
Because the tax is 45%.
Yeah.
So own it in a company rather.
Yes.
So now to own a property, you need a company and a trust. So each of those need to be audited probably. Certainly you've got accounting fees every year. And those costs are never in these calculations, but they're very real costs.
And who's running that for you? Is that now
Well,
they
you
selling
can run
this?
it yourself, but again, the man in the street doesn't even know what a trust is.
Yeah, yeah.
So they say, don't worry, sir, we will manage it for you.
At a fee.
At a mere 300 Rand a month. You know, and so there's a 300 Rand a month there, and then there's the audit fee, etc., etc. So what these developers are, these 2 that I'm thinking of right now, who shall not be mentioned, they actually are starting an accounting firm at the same time. So they're building up an accounting firm with a big book of clients who they retain for many, many years. So it's a good business model. But don't by all means have a trust, but don't be duped.
Just talk about that because you were talking about earlier about the 28%, the 40% tax, and you're talking about the tax, how it actually works now in your experience. What tax? I mean.
Okay, well, I'm not going to go into all the details now, but I personally. When I started my investment journey, I didn't know what to do. And if I spoke to an accountant, he said one thing, a tax guy said another, attorney said another. So I did everything. I've got a real smorgasbord. I got some in my own name. I bought some together with my wife. I bought some in a CC, some in a trust, and some in a company.
So you got you got the smorgasbord.
I've literally got, what's it, 2022? I've got 20 years experience of owning property in all these different vehicles.
Okay.
And without going into the detail, I can tell you that the highest tax rate is in a trust.
Yeah.
It's 45% of your profits. But I've never spent a cent in tax in my trust.
Okay.
You know how? I just don't show profit.
Yeah, you don't show. Okay.
You don't show profit. You just disperse all the money before year end. So the actual amount of tax in the trust is irrelevant. We're not trying to make the trust rich.
Yeah.
You're trying to earn an income out of this for yourself. So in my trust, in 20 years, I've never paid a cent in tax.
Sure.
And it's legal. All audited and so on. In my company, I've paid a bit of tax because in a company, you can take money out by way of dividend or as a salary. And unfortunately, you can't pay your child a salary, which you can in a trust. And then I don't know if you, but my children are much lower tax rate than myself. And then, of course, in your own name, there you're paying at income tax. So you've got all these different structures, but you don't need, if you've got 5 properties or less, you're not ready for a trust.
Okay. Oh, that is
and
excellent.
certainly I've seen no benefit in the company.
And now, you know, my mother always said to me, like, when you sign a contract, read the fine print. So Neil is just going to highlight, just show them that.
Okay. There's the fine print.
All right. So just read what the fine print says now. This is on the advert now.
Okay. This is in their email. I'm reading it. It says, nothing. It's nothing.
Yeah, nothing.
What does nothing mean, Warren?
Yeah, nothing.
Nothing in this document should be construed as true.
All right.
I'm sure the attorney told him to put that in. It certainly wasn't the marketing.
Okay, so what does that mean? Is that
but if they're saying to me that nothing in this document should be construed as true, well then, and yet they want me to spend 600,000 rand, 700,000 rand on property. So ask the questions. Ask the questions.
Ask the questions. Yeah. Do your homework, and all you got to do is just click the link that we'll put below the video here. It can help you a lot.
We've got 2 bonuses for you.
Yeah.
Okay.
Yeah.
On the link that Warren described. First thing is we're going to do a PDF. Give you a PDF of the questions to ask before you buy.
Of these 12 questions.
Yeah, based on these 12 questions. The questions to ask before you buy, whether you're buying a second-hand property or buying from an investor, I mean a developer or one of these investment clubs, ask the questions. And if they're straight up, they'll answer your questions. And then the second thing is we're going to give you an investment calculator completely free. It's just a downloadable Excel file. You plug your numbers in and it'll spit out results. And you use that to compare each property apples with apples.
Yeah, and these questions, I just thought of this, are not just useful for buy-to-let investors. Even the ones that are going to own it, these questions are very useful. So actually,
if you're going to live there yourself.
If you're going to live there yourself, these questions you should ask anyway.
Yeah, well, the rental's not that relevant, but certainly the levies are.
Yeah, but at least the levies, and you're going to find out what's going on. But anyway, this has been excellent. I've learned a lot. Thank you, Neil.
It's a pleasure. And I just want to say something right at the end, is my intention here is not to diss the developers.
No.
Because everyone's making money and their jobs and so on. I'm just saying to you as an investor, do your homework.
Yeah.
And by doing your homework, ask the right questions. And if you don't get an answer, that's an answer.
Yeah. The focus of organic growth is to educate the investors. So we're not trying to say you have to buy through us and get anything. But when you go out there, be educated. And this is very
open
valuable.
your eyes.
Yeah, open your eyes.
And that's the purpose. If you watch this video and it's even one thing that you thought, I have never seen that, then I'm going to be happy. So please put your comments below the video. We'd love to see what you have to say. If you've got any further questions, we'll answer them. And we look forward to seeing you in the next video.
Thank you.
And we're going to put up some videos right here now. We'll put them all over here. Just click them if they strike your fancy and get educated.